All righty. So, with all the conundrums going on concerning Greece, as you can imagine, I've been watching the euro quite a bit. There's an interesting fib here that completed this week, yielded some pretty good trades, but in the process, it also set up a much longer trade on a different pair for us. And I'll walk you through both. In the process, show you how to use fibs. And beyond Fibonacci, I think you'll learn a couple other cool tricks today. I always like to teach from the live markets. They yield plenty of good examples. So the trades I share with you guys are the same ones I've taken or am in. Okay, one of them still in progress. To use a fib, you guys, you need to identify 4 points. A, B, C, and D. It's really that simple. If you can count to 4, I can get you to use fibs. There's no need to be afraid of them. Okay, point A, very simply, is where your trend began. The top, the point. Okay, simple enough. Now you'll notice there's 2 points here. Right, there's the red wick. There's also the green one. I'm going to start out putting my A here, because the classic definition for fibs is most recent high to most recent low. Okay? Most recent, not necessarily the highest high. Okay? Sometimes, and I'll show you how to check once we've got our fib up, but the classic definition is most recent high. So that's why I'm going with the red one. And very simply, our low is how far we got before we had the first pullback. That becomes my point B. Look, we're halfway done. It's not so bad, right? You guys still with me? Understand how I did that? Where the trend began, the trend that I'm attempting to find out how far it'll go before it ends, because that's the job of a fib. Fibs answer the question, how far? If you're looking to answer a different question, you should probably reach for a different tool. Fibs answer the question, how far? Hey, something's dropping. Is it still worth getting in? Where should I set my target? Are there any support resistance levels along the way I should be aware of? Those are the questions that fibs excel at. It's a tool. It's not a system. Won't tell you how many lots to use. There are questions it won't answer. It's a specific tool for a specific purpose. The upshot is, and this is the good news, you can use it with most any trading system. Okay, if you have a favorite way of finding entries, you can combine fibs with it to help you measure risk reward, to help you set targets, to help you trail your stops, because it identifies multiple support resistance levels along the way, and so forth. It plays well with others. All right, I'm going to reach for my Fibonacci tool, and what I'm going to do is I'm going to go up to the top of the point by point A, and by the way, because in this case we're measuring distance, I'm going wick to wick. Okay, a lot of people always ask, how do you know if you should use the wicks or the bodies? Well, when I draw trend lines to see if they break, for example, which is one good way to do entries, notice there I like to connect the bodies, okay, because bodies represent consensus. If I'm drawing a trend line, I'm interested in consensus, okay, so I go with bodies. When I'm measuring distance, I like to go wicks, okay. So always ask yourself the question, am I measuring distance or consensus? Okay, Mustafa's asking, and by the way, guys, use the chat window so everybody can see. Okay, I don't always glance down at the Q&A window, just FYI. He was asking, why didn't I use the green one for B? Because it hadn't happened when I picked B. Here. Which green one? Here I picked the red and not the green because this is the most recent high. Okay? For B, I picked the lowest low we had before we had a reversal. Okay, there is no other lower low. It hasn't happened yet. That's the simple answer. Okay, so we're measuring distance. We know we're going to go wick to wick. Let's reach for our Fibonacci tool. You can ask questions. The whole point is that people understand, Mr. Boyke. Otherwise, I'm just talking for the fun of it. So I go to the top of the wick at point A. I'm holding my mouse button down. I don't let go. And I drag down to point B. And that's where I let go. And boom. These are the Fibonacci lines. Now the next thing I do is I check for what is called snaps. Snaps, very simply, this can be either a body or a wick, but I want to look for some evidence. Remember, I only control 2 points, right? My starting point, my ending point, A and B. I look for evidence on the in-between points that I don't have control over, that I have the right fib, that they're snapping to some of these in-between lines. Look at this wick, for example. Look at that green one. Look at both of these green ones. Look at this red one. Okay. I would say we have some snaps. A snap, very simply, is a body or a wick resting right on one of the in-between lines, because I don't control those. So if I land on them, that's more than coincidence. Okay. Let me show you some examples, and it's really easy to adjust the fib, by the way. The red dotted line reminds you how you drew it. Simply double-click on that, and you get these little white squares here. From there, you can just simply click a square and drag it. So let me try this A. For example, the highest high instead of the most recent high. Do I get more snaps? I get some here, I get some here, I lose these. But you know what? I gain all of these. Let me try, let's say, ooh, we made another lower low. Should I use this fib? Well, these gave me a really nice snap. Over here, but nothing recently. I like to have recent snaps. The most recent price action is the most important. And I lost these guys. What about if I go totally end to end? No snaps at all. Okay, so I can rule that one out. From the rest of my possibilities, let's see which one has the more or the more recent ones. This one has 2 and only 2. Nothing recent. Okay. So trial and error. I know that's the best B. Let me find the best A. How many snaps do I have here? 1, 2. Recent ones, yes, there's one right here. Okay, so 3, 4 snaps. Let me check here. 1, 2, 3. I'm still liking this one. I think the best because it gives me the most recent one. Okay? But you see, you can very easily try it out. And the reason I call these things snaps, you guys, usually when you have the right fib, everything will just snap into place. Visually, I mean. If a lot of things are dangling off in midair, it's probably not the best fib. Yeah, I'm liking this. This gives me more snaps than anything else. It's not really guesswork, Alan. 9 out of 10 times, the most recent high to the most recent low will get you there. It's just that if you draw it and you're not seeing as many snaps as you would like to see, then try any nearby highs or any nearby lows to see if you get more or better snaps. But I mean, look at these wicks. That's pretty smack on. Okay, that's what's selling me on this particular fib. So it's not really guessing. There is a methodology. Go with the one that gives you the most snaps on the in-between levels. And that's how you can check, Mustafa, if you've got the right variation. All right, next we need point C. Point C, very simply, is the deepest retracement. And here, not necessarily the most recent, the deepest. The furthest point back towards A reached before the original A to B direction resumes. What are you getting after the snap? I'm not sure I understand the question, Tico. You haven't gotten the whole point because I haven't gotten to the end yet. We're still going through the process. So far what we've done, we've measured part of the move in order to predict the entirety of the move. The whole point of this exercise is to figure out how much further the trend can go. Is it worth getting in or not? What's the best price point and timing to do so? And if we get in, where do we set our target? That's the ultimate point, but we have a few steps before we get there. Okay. Zia was asking, may I know when will the fib fail? Well, it depends what you define failing as. I know that C goes to D statistically because I've researched this at length. 77% of the time, C will go to D. That doesn't mean that the other 23% of the time are necessarily losing trades, Zia. You might have to get out early ahead of D, maybe for less pips than you were hoping for when you got in, but it's not necessarily a failing fib or a losing target. Or a losing trade, I mean. You know, sometimes a new piece of news comes out, you have to abandon a trade early, sure. Generally, as a rule of thumb, as you're proceeding down, you should be breaking support levels and retesting them from underneath as resistance. Break support, retest as resistance. I guess you know when a fib is failing because suddenly support holds, resistance fails to, and then you find a new support level higher. That can often be your first evidence that things are reversing. The fib's actually not failing. The levels are still there. The trend is reversing. The fib is actually, be grateful for the fib because it can alert you to that fact. You see what I mean? In a normal progression, you should keep breaking levels. And if you retrace, it should only be to retest from the other side. But if ceilings suddenly start becoming your new floors, like this, would have been cause for concern, but we didn't find support here. And then we kept going, and we ultimately broke support down here. But had any, like here, for example, this is a great example. Look, we broke the ceiling. We established a new floor. When I got this open above the 138, for example, that particular day I exited my trade. I got back in once the floor broke and retested as a ceiling. Okay? So sometimes that happens too. Just because you get out of a trade doesn't mean you have to abandon the trade idea or the fib. Sometimes you have to sit out a retracement and then get back in. That's where the in-between support resistance levels come in handy. What time frame? Warren, great question. What I love about fibs is that they are time frame independent. Whatever time frame you already enjoy using. Personally, I like to every day look at my daily charts. I'm a big stickler about candle opens, you see. I tell my students never, ever make a decision whether it's getting in or getting out mid-candle. Why? Because whatever you use to justify that decision will change before the candle closed. Therefore, you are not using a trading system. I don't care how much analysis you did before you pulled the trigger. If you're doing that analysis mid-candle, you are not using a trading system. The only thing that won't change is what's already closed. So therefore, that's the only thing you can use as part of your consideration. A lot of people don't realize that. If you can't wait till candle open, go to a lower time frame, wait for a candle to open there. But never, ever make a move mid-candle. It's like Las Vegas with its noise and its blinking lights. It's supposed to move up and down and distract you. Okay? Don't fall for it. So being a stickler for candle opens, every day I have a new daily candle. So first thing I do with my mornings, Warren, is I'll check my weekly charts, I'll check my daily charts, I look at the big picture. And then I zoom in and trade on my favorite time frames. Mine happen to be the 4-hour and 1-hour chart. I use the 4-hour for direction once I've established my daily scenarios. And then on the 1-hour chart, I look for trades in that direction. That's my general procedure. Okay, here, for example, hourly chart. I'll show you what I mean by time frame independent. I haven't moved my fib. Fib is still in the same place from the daily chart. But gee, look at this. Right? We break below, We retest as resistance. Look at those beautiful snaps. I haven't moved my fib, Warren. Down we go. Here's a chunk of that fib. Are we going to find bottom at 200 or go further? Look what's happening here. Seems like we're doing another retest as resistance, getting ready to open lower. We're beneath the cross. Anytime there's a doji-like candle, meaning long wick, small body, I look to see what side of the cross we open on to get an idea of the next direction. Okay? That's exactly what we're doing now, is playing with resistance. What if you trade on the 5-minute chart, not the hourly chart? Great. Look. Break below, retest as resistance. You know? Look at here. Look at where all the congestion is taking place, not in random empty place, but right on a fib level. So that's what I mean, Warren, by time frame independent. Draw the fibs where you can see the zigzags the clearest. You got to be able to see the beginning of the move, right? Draw where you can see the big picture, then zoom in, trade on your favorite time frame. And sometimes you can also find fibs within fibs, by the way. You know, here's one on the 4-hour chart. It's anywhere you see a zigzag. Most recent high, not necessarily the highest high, to the most recent low. Boom. Here's another fib here. You can trade where the levels double up. You know, this is an important level because both fibs double up. Break, retest as resistance, off you go. Okay. Next congestion area is probably where they double up again. So short answer is wherever you see a zigzag, not necessarily on the same time frame as you're going to trade on. That's the beautiful thing about it. TI 108, how you doing? Would love to. I'll explain that here as we go. Okay. B, where I let go of the mouse, they're not really additional levels. You'll understand where they come from in a minute. B, I'm calling 0 because that's where I let go of the mouse. Right? The fib technically begins where you let go. The numbers that count up here, as I go back towards A, this is the percentage of Fibonacci retracement. Okay? So, for example, where I put my C, 50%. In other words, halfway. Right? And if I move over to the other side of the line, you can see, yeah, my mouse pointer is halfway between A and B. Okay? So this is the percentage of retracement. You'll notice all the numbers down here are all over 100, TI. The reason they're over 100 is this is the percentage of extension, how far past B we've gone. Okay, so this is 118% past B. 100 would be back to B, and 18% more. So the reason you're seeing more levels is normally this is two separate Fibonacci tools. One is Fibonacci retracements, one is Fibonacci extensions. I used a little bit of math and cleverly changed my settings, so basically I can see both tools with one mouse click.